I'm not embellishing when I tell you guys today was the busiest trading day of my year, maybe even my career. In this week's weekend review video, I'm going to talk a little bit about that, why it was so busy and some of the moves I made, and well, why today finally prompted me to make a change in my trading that I've been talking about for a while. So sit back, relax, and enjoy this week's weekend review video. Hey guys, welcome back. My name is Akil Stokes, head currency trader and trading coach at Trade Empowered, and thank you once again for joining me for this week's weekend review video. As always, if you're new and you like what you see, hit that subscribe button, hit that like button, and if you're one of the thousands and thousands of followers that join me here each week, as always, I appreciate your support and keep supporting it. It does mean a lot for me. Now, as I mentioned earlier, today was a very busy day in the markets. And I actually wrote a post about this last night for my own personal blog and then for the Trade Empowered site as well, called, I think it was something like Sell the Euro Now. We knew that there was a lot of fundamental news coming out in the markets between ECB policy as well as some US data coming out. And today was the day that the week has been waiting for. It's been a moderately slow week in the market, and everything's been waiting to see what is Draghi going to say, what U.S. number is going to come out tomorrow. And in the post, I talked a little bit about how the old me would handle that situation, trying to jump the gun on the fundamental side, and well, how the new me now is a lot more disciplined. Regardless of that, the markets did not disappoint today, as it was a very, very busy day. I had a few trades filled in the London session, and then when 7 o'clock rolled around in 7:45, I had a few more trades before the US session, and it seemed like we were busy all the way through the end of my day trading day. And even now, as I look at the markets, I've got some of my 12-week transformation members shooting in just shot in a euro dollar cipher, shooting in some orders now as well. So it's been a busy day. Add that to the fact that I've expanded my portfolio. Earlier in the year, I was watching a 10-pair portfolio. But since getting my hands on the Constellation software, what it's allowed me to do is expand my portfolio, because now I don't have to spend as much time doing my market analysis. Now there's pros and cons to that. You're going to get a lot more potential setups. And because there is some confluence between these pairs, when those potential setups form, a lot of them can happen at once, and that was today's trading. I took 10 trades today, and 10 trades, and I'll go ahead and list them on the side somewhere of the video. So yeah, you can see 10 trades today. For you guys that know me, I'm not really a big trader. I'm not really one going for a lot of action. I'm somewhat conservative with my entry approach, but hey, they were all valid signals today. And what I want to do is just shoot you back through a live recording of today's live room session. And actually something that we did yesterday too that ended up being a pretty good trade. I want you to look at those trades and just the thought process that we went through when placing those trades, and then I'll come right back and explain kind of what this big change is that I'm making in my trading. So sit back, take notes, and enjoy some live action from my daily day trading room. And then we've basically consolidated into here. Now, if you notice the bottom line of this flag, has come right up to hit our previous structure high. So the market has ebbed and flowed, swing high to swing low, swing high, swing low. Where do we come back to? Look left, structure leaves clues. Put another dollar in my pocket for that. Right back into structure here. Where's our flag pattern at? Well, if I extend this line out, we're coming right back in the previous structure. These are the types I like to trade. If we're looking at 90, we're looking at 95.02 down here. Looking at stops, 87, right below those swing lows. It's not a bad move at all, if that can happen. $95.40. Even that's not too bad. $95.60. Yeah. Yeah, I'll buy these up if we get down to that 95 lows. I'll buy these up. Sorry about that. Was in the zone. Billing. Jason said, I'm out of dollar yen for plus 15. It's been a back and forth week. Hope we can see Canada yen rally. Still fighting the Canada yen battle. You actually got a good opportunity here on euro dollar for I'm going to take a long here, quick long here. Very short stops here for euro dollar. At market, RSI is overbought. We're going to get 10 very small stops here. If we're wrong, we want to be wrong quick. But we came down to our structure level. Again, watching price action, we did swing low to swing high, outside return, swing low to swing high. We're at an outside return right at our previous swing low, and you can see the market. We came down there, and then we put in a higher high, higher close with this bar right here. So taking a very low risk opportunity here, looking for a retest of our structure level up at this level. Looking at a very small risk of about this much for, about a 3-to-1 risk reward. So in situations like this, when the risk is low, I don't mind being aggressive like this. If we get stopped out, I lose, it's 10 pips loss. Not a big idea at all. Matt said you're buying into structure? Yep, like we always do. So as you can see, two pretty good examples there. Let's just recap where they're at. Let's start with Aussie yen. Aussie yen, we talked about that I was calling it a flag pattern in the video, but it was actually a pennant pattern or a wedge. And we looked at that, and you can see price action came down. We actually broke out to the high side. Now, I didn't personally get involved in this trade. I was looking for 95.02s, 95.05s, and just never got that hit initially. So I had to sit back and watch. But as I tell my live room members, that's not a bad thing. That's not a bad thing. As long as it's a learning process, as long as you're getting better, as long as you're building confidence in it. Now, if you missed it because you were scared to get in, or you were, making lunch or walking your dog, something like that. If you missed it from some reason of your own fault, then that's a red flag. You want to write that down and try not to let that happen again. But if the market just didn't give you what you're looking for, there's no point in beating yourself up. But you can see this one blew out pretty nicely, straight up to the upside. And actually, one of our live room members caught this thing twice on a trend continuation move from a little lower. So they made some pretty significant profits. The second trade I want to talk to you about is the euro dollar. And this is the one that I went over later from today's live room session. And what's cool about this, again, this was a pure structure-based trade. I finally got my range bar charts working, and this just explains why I love the range bar charts. If we take a look at the regular minute charts, 5 minute, 15, all of this is just so sloppy. We can go ahead and look at this on the 5, and we're looking at this whole type of movement, and look what the market's doing. Just straight move up, then it dies off, and it doesn't look too appealing. We go down to the range of our chart. It's a much smoother ebb and flow to the market, and as you can see, it allows us to catch some pretty good structure-based trades. This one was pretty simple, and it's basically the things we teach in day one or week one of the training course, things that Jason and I taught you during the Turning Point seminar. And if you haven't seen that, go ahead and follow the link at the bottom of this video. You can go watch it. It's 4 days of straight training, more so in the psychology and mindset, because that's the approach we wanted to take this year. But we do some technical analysis in there as well. But it's basically the principle of how the market ebbs and flows, reading price action, new structure highs, outside returns, new structure highs, outside returns. And, when you can line it up right with a very, very small risk reward, it can pay off pretty good in your favor, as you saw on this attempt. So I really like the structure stuff, and having that Constellation software has allowed me to concentrate a lot more on that and not spend as much time identifying patterns. Now, I showed you guys all the trades I was in earlier. I took about 10 trades today, won 5, lost 5, I think it was. I'm still currently in 3 trades, and actually this euro move we just looked at is going up to another potential short on euro. We actually had a go to the euro dollar 4 hour, I think it is. What did Sandra write in? I think it was 4 hour. We've got another potential short on euro. I had a long entry down here earlier in the day on a very, very deep Gartley pattern, blown right out the water when news came out. Just showed you guys the trend continuation trade, riding this bad boy back up. And now if we come up a little further, we've got a potential cipher pattern completion here at 36.84. So looking to get short one more time on the euro dollar. Back and forth, back and forth. Again, you can trade one pair, one pair, and have plenty of action. But the change I wanted to make in my trading, and if you've been following me for the beginning of the year, you know that one of the biggest complaints or issues I've been seeing is that the market just isn't, the volatility just isn't there in the market. The market just isn't moving how I'm used to it. The ATRs have been very small, especially compared to a few years ago. And what that means is the markets, they just aren't moving enough for me to fulfill my full profit targets. And I'm a 2 contract or a 2 position trader, meaning I enter 2 positions. I take one off or half off at target 1. I take the second half off at target 2. I'm big on risk reward, and we talk a lot about you want to get a 1-to-1 risk reward to target 1. That really isn't the case. You really want to have a 1-to-1 on average. So as you go through your back testing, you get your target 1, your average target 1, your target 2. Your average trade and your average portfolio should be a 1-to-1. Now, of course, that means, I get this question a lot, well, Keel, if it's 1-to-1 to target 1, it's not really what happens when the market gets stopped out. And you're correct. When the market gets stopped out, I lose a full position. So if the market hits target 1, I gain a half position. If the market gets stopped out, I lose a full position. Now, over time, if I'm confusing you, I'm sorry. Over time, it balances itself out because the amount of time that target 2 is hit, and target 2 is usually, usually double of target 1. But this year, I haven't been getting those target 2s hit, and what it's been doing is hurting my trading a lot. See, I'm typically 60% max with my trading. I'm not a 80%, 90% high probability trader like that, and most professionals aren't. Most professionals are going to be between that 50 and 60 range, and I'm right in there, about 55%. I'm about 63% this year, so a little higher. But the main difference is that my target 2s haven't been hit at the percentage that I'm used to, or at the rate that I'm used to them being hit. And what that's done to my equity curve is it's consolidated me. I've gone, I showed the live members this today. I had a great January. Where's my tool? I had a great January. We shot up, made new structure highs. And essentially, since middle of February, I've just been doing this, consolidating my equity curve up and down in a channel. And again, I'm hitting my trades at 63%, which is higher than my average. So I'm asking myself, Akil, you're winning at a better percentage, but you're unable to break these structure highs. What gives? And it's been the fact that target twos haven't been hit. And when looking at my data today, I've actually made more profit off my first targets than my second targets, which sounds good, but no, that's a bad thing. That's a bad thing. That means I'm essentially wasting money. I would have made more money if I just took a full position off at target one. So after a lot of data, going through a lot of data, my personal statistics, I've decided to make the change, at least on certain trades, that I'm not even going to shoot for target twos, especially with structure-based trades. It's going to depend on the pattern, the overall trend of the market. I'll read the market. If I'm expecting a bullish continuation and we have a bullish Gartley pattern, that would be a different story. But in general, I'm going to shoot for one target until these market wakes up, until we start seeing the movement that we're used to. And the reason being is I'm leaving massive profit on the table by shooting for a target two that ends up stopping me out at break even. Now, I'm not telling you guys to go do this. Check your own data. If you've been pinging target twos and they're bringing you more money than your target one, that's a good thing. Stick with it. But I believe in evolving as a trader. It's always a continued journey, and that the same style isn't going to work in all the markets. You got to be able to adapt. And that's why we try to teach, when I do my training courses, like the 12-week transformation, that's why I try to teach these guys the basics first, so they can adapt. They're not just stuck in one set way of trading. They have the knowledge where if something goes wrong, they have options, or if something is struggling, they can look at different entry techniques and stuff like that. So that's my big change. It got a little long with it. I'm sorry. I like keeping these videos to 15 minutes, and that's not going to be the case. But I did want to, you guys have been with me for my entire journey, back when I was a scrub. So I like sharing with you the changes that I make in my trading. And I've talked to a lot of members, either in the 12-week transformation or just traders that I email or tweet back and forth on a regular basis about this same issue, because they've been having it too. And that's the advice that I've lent to them. So that's it, guys. I feel like I should say something else, but I'm not sure. So I'm just going to cut this video off. But that's it. Thank you for joining me. Hope you found this informative. If you did, please leave a comment. If you do, please leave hit the like button, hit the subscribe button, share this with a friend. Don't hold this to yourself. Be giving out there. And I will see you guys next week. Until then, plan your trade your plan. I won't be trading tomorrow. I'm off for a 3-day seminar, but be careful in the markets tomorrow. Non-farm payroll release, so it's going to be similar to today. So it may be worth just closing the charts down and calling it an early weekend. But I'll leave it up to you. Take care, traders, and have a great weekend.